inflation rate, which has been a source of concern for policymakers, businesses, and consumers alike. According to the NBS reports, Nigeria's inflation rate hits a staggering 33.2% in March 2024, the highest over a decade, raising concerns about economic stability and prospects. While food inflation reached 40.01% year-on-year, core inflation, which excludes the prices of volatile agricultural products and energy, rose to 25.9%. On a year-on-year basis, what are the underlying factors that needs to be addressed with these figures? Let's get talking. And I'm being joined by an investment strategy and portfolio manager with Afrinvest West Africa, Mr. Temitope Omosuyi. Good afternoon, Mr. Omosuyi. It's good to see you. Thanks for joining the program.
Good afternoon, Tolu. Thank you for having me.
Well, of course, my first question would be 33.2% is what we have for the month of March. What were you expecting? And what is your reaction to some of the fundamentals surrounding these figures?
All right. Thank you very much, Tolu. Well, we knew that inflation will continue to inch higher, around 33%. And the expectation is that the trend is likely to continue within the next 2 months before we'll begin to see some deceleration. In fact, the CBN had thought that inflation will peak at 33% in May, but it seems the shock we saw at the FS market has taken a toll on prices. So it seems the peak has jumped ahead of the CBN's view, which means that we may see a higher level of inflation before we begin to turn the curve on the very hot numbers we are currently seeing.
But food, we saw a reduction, I think, month on month for food. But generally, what is your reaction to food inflation figures in Nigeria at the moment?
Well, I think it's very disturbing, to say the very least. Inflation, food inflation, over 40%. And if you look at it effectively, that is, if you analyze it on month-on-month basis, if you analyze the month-on-month, food inflation is over 50%. And if you drill down to a commodity price watch that is usually released by the NBS, food inflation is actually over 100%. It's over 100%. As a matter of fact, the top food items that are consumed by Nigerians, according to the NBS, they've gone up by over 100%. So that shows the severe pressure on inflation in Nigeria. Yes, the conversation has shifted to how the current appreciation of the naira would impact inflation. But last month, we saw about 32% increase in the price of, before the major appreciation we are seeing, as at today, we saw about 32% increase in the price of dollar. So in a way, that may have contributed to inflation number we saw. And there's always this expectation that is built in Nigeria once FS have started going up, and prices of commodities will start skyrocketing. In addition to that, there has also been a lingering impact of insecurity. One cannot downplay the impact of insecurity on food supply in Nigeria. And sadly, because I know you might want to be thinking about how the current appreciation of the naira would impact food prices. But then we know that in Nigeria, there's this behavior around commodity prices. Once prices are high, you are likely going to get to a point where prices will moderate. We saw that in 2016 into 2018 when exchanges skyrocketed. But since 2016 to date, we have not seen a major decline in inflation to a single digit that we used to see in 2013. So the situation is, yes, FS is a major contributor, but because of our structural challenges, just about some hours ago, I was talking to someone in the market, a popular market in Lagos. So this person was telling me about, because I just wanted to get a sense of what is really happening in the market. So this person was talking to me about how, the prices of some items, about two, have dropped, but most other items are still going up in prices, right? And the conversation is that, for instance, a bag of rice that used to be, that skyrocketed to about over 70,000 naira, right? Has dropped to about 65, right? And you and I know that we're coming from less than 40,000 naira. So that drop may look, yes, applaudable, but we're barely 50,000 before the end of last year. So prices are usually very sticky in Nigeria. And the fact is that the level of productivity is ridiculously low. For instance, it's quite clear in Nigeria that we use less than half of arable land in Nigeria. That alone tells you that even if government increase money, for instance, if there's increase in wages and all of that, the problem is still lack of productivity. So if you have more money today, you are likely going to just put pressure on prices. That's why some economists will always say that, okay, inflation is always and everywhere a monetary phenomenon. To a large extent, yes. I know that some might want to ask me that, am I saying that you have a lot of money? No, you have a lot of money, more than what is produced locally. And in addition to that, I also yesterday, I spoke to a consultant in the agricultural sector in Nigeria. This person was telling me that it takes a lot of courage for aggregators that are intermediating, that used to intermediate between manufacturers and farmers. It takes a lot of courage for them to even go to the farm right now because of high level of insecurity. And the farmers, right, that are even that are currently cultivating, they have to pay a lot of backs to all sort of people, that are threat to their lives. So you have to be very, very determined right now for you to be able to go to farm. And I think one other point that the consultant mentioned to me is that manufacturers are still paid for products that have not been harvested. You know what that means? It means that the level of productivity in Nigeria is ridiculously low. Now, if we don't address insecurity, we are going nowhere. And for every country in the world, right? For every country in the world that seems very stable, from the US, UK, and among other advanced economies and strong emerging markets, they prioritize two things to ensure that they are secured: food and energy security. Food and energy security. You'll be surprised that a country like Ukraine that is war-ravaged, inflation is not even up to 5%. Inflation is not up to 5% in Ukraine. Nigeria is not in war. Russia, that got all the sanctions that you can ever think of. We don't even have 1% of that sanction. Russia's inflation right now is not up to 10%. And let's even talk about the most recent war, Israel, that investors should have exited those countries, right? Israel's inflation, right, is not even up to 5%. So I think it's high time we began to look at approaches to address this problem, because inflation, I can tell you, inflation is killing people in Nigeria more than war. Because if you are not able to afford the right medicine for someone that has terminal disease, if you are not able to afford good food, if you are not able to afford transport, if you are not able to afford housing, it's not just going to impact Nigerians of today. It's also going to impact the future of Nigerians, because if you don't eat quality food, if you don't have good nutrition, brain capacity, I suspect that it will be impacted, because Nigeria has the second largest stunted children in the world, like globally, and this record was as of 2022. So just imagine the level of inflation we've seen between 2020 to date. This number would have increased substantially, and it was even reported by UNICEF that 32% of children under 5 in Nigeria, is experiencing high level of malnutrition. So it is, in fact, there has to be a state of emergency on food and energy security in Nigeria. And it's not just by mouth. We have to act decisively, not just for the now, for the future of our country, because it is very, very important for the security of Nigeria, not just about the weapon or defense. Food security should be on the front burner.
Despite interventions of the Central Bank of Nigeria, many still say that inflation still continues to go high. NPR at the moment is 24.75%. But clearly, inflation continues to go higher. Now, two-in-one question. What does this mean? Again, I want your views with regards to what 24.75% means for the real sector, for the business people. And on the other side, why inflation has refused to even come down despite that development.
All right. So, Tolu, thank you very much for that interesting question. For every economy policy, we have two broad areas: fiscal and monetary policy. And in economic policy, there's what we call the decision lag, the impact lag, right? Decision lag is when you make, is a period you make that decision because of an economic event. And the impact lag is the period between when you make the decision and when the impact will be felt on the economy. We know in economics that for every monetary policy is able to make decisions faster, but the impact is not as important. In fact, it's not as fast as fiscal policy. However, we understand that in fiscal policy, when you make decision, it usually takes a while to make very cogent decision because it has to go through the legislative arm and all of that. But it has to make your impact on the economy. As a matter of fact, I believe that monetary policy is just CPR. That is, the kind of process, or let me call it first aid, the kind of process just to ensure that something is relatively stable within a short period of time. However, to achieve a price stability on a sustainable term, yes, nothing much the monetary policy authority can do beyond tweaking all of those variables: interest rates, money supply, and all that. And to look today, when we talk about the FS condition and what the CBN is looking at, the CBN is looking at how to use interest rate movement to affect FS rate. Yes, that is very critical to an economic stability. But when you disaggregate Nigeria's consumption pattern, as reported by MBS in 2019, right, the topmost we spend about 56% on food, right? The topmost on the list is yam. Do we import yam? No. So which means that some of the policies of interest rates, exchange rate, and all that will not really affect that area. So the question is, what is happening to middle belt, or where we are getting yam in Nigeria? The second one has to do with rice, vegetable, among others. We know that, yes, some of these things are imported, right? But there's a point where the policy of the CBN will not affect food supply, especially food that are not imported. So interest, as a matter of fact, it's even possible for higher interest rate, when interest rate is too high, to have a negative impact on inflation. So I believe that at every point in time, the CBN has to continue to monitor the optimal point, because if interest rate is high, you already know that commercial papers and all sort of issuances or medium of funding by private sector would be negatively affected, because they have to raise money at a very high rate. In economics, we call that crowding out effect of the private sector. And if that happens, if companies begin to grapple with high interest expense or high cost of funds, it will affect their profitability, and ultimately they will want to tweak other variables. And what comes to mind is labor, which means that they want to consider on the job market. They want to cut on their overhead. So it is very, for the in fact, I would say that the job is 20% monetary policy, 80% fiscal policy authority. Otherwise, there's no, it gets to a point where once you increase interest rates, right, at a certain point, it can become inimical to the economy. As even exchange rate appreciation, there's a limit to the level of appreciation you can have in an economy, because for every monetary policy, there are unintended consequences. You cannot, that's why an economy cannot be too hot or too cold. Price appreciation of the currency cannot even be too much as well. So I think that the onus lies on the fiscal authority to take decisive measure to support the monetary policy authority, because even if we push rates higher to 30%, at the end of the day, we are likely going to create a lot of problems, even for the financial sector, and that will have a ripple effect on the overall economy.
Finally, food and energy security you mentioned. Very important things. But at the moment, electricity tariff in Nigeria for Band A consumers is over 300%. That's the increase we've seen. When you talk about energy and food security, can we wrap up on that note? Highlight what you think government can do to make this happen.
All right. So for food and energy security, when you talk about security of food, we are looking at accessibility, affordability, right? Those two parameters are extremely important. food must be affordable, and everyone in the country must have access to it. They must have access to it at every point in time. If you need food right now, you must have it. So we don't have to begin to talk about malnutrition anymore. In addition to that, you must have access to it in the right quantity. So for energy, I would say you need the right voltage to be efficient. So why this is important? Because Nigeria productivity is not as efficient. If there was enough energy supply in terms of electricity and all of that, right, then everybody will become more productive. You see someone that is able to do a lot more work online. You can get a lot of freelance across the country. In fact, your costs and you'll become more efficient. You'll be able to plan your life. A lot of people think about electricity supply in Nigeria, and that in a way is affecting productivity. So it is actually very important. It's very, very critical for government to begin to look at how this is addressed. And I think that the policy strategy has to be carefully divided into three parts. We have to look at the short term, medium term, and long term. For short-term policy approach, it does not matter how hard the decision. It could even be for Nigeria to import food to eat, because for every policy is a means to an end, and most times end justify the means. Because if you are making a policy and people are not seeing the impact, they will complain. So it is very important that we look at the short-term approach. It could also be subsidy, food subsidy, where we have food banks. There's no nation in the world that there's no a bit of subsidy. I think the problem about subsidy in Nigeria is the high level of corruption. In fact, in the UK, there's subsidy on energy, although they allow a bit of market reflective rate, but the government ensures that there's a cap, because when something is very important, like energy, electricity, and when it's those kind of utility, government tries to ensure that welfare of the people, is not severely or negatively impacted. So I think that we need food bank in Nigeria. It is super important, and we need more public markets that people will be encouraged to go to the market. And we give a medium for state government, local government to regulate prices. They'll be able to regulate. In fact, it's going to be a win-win. There'll be times where the state governors or local government would give waivers to sellers in those markets. And the medium term and long term, we have to monitor. We have so many policies and programs in Nigeria for agricultural sector. We have to monitoring and implementation. Implementation and monitoring of this program is very, very poor. We have to begin to look at that. We've talked about a lot of intervention from the CBN in agriculture, from fertilizer, financing and all of that. We need to begin to look at how everything is implemented to the later. Like, we have to see the numbers. In fact, if possible, government will create, would prioritize. In fact, maybe the military should be reporting to the government, to the president directly, because without food, right? In fact, there's this saying that a hungry man is an angry man. You cannot be productive. You cannot be productive. And I think on a long-term basis, we have to fight security as if Nigeria is fighting Boko Haram and other insurgencies. Inflation must be fought. Insecurity, right, must be fought headlong, because its impact on food security is grievous. So we have to look at it. So beyond just security of life and property, we know that insecurity is impacting inflation. So that must be decisively addressed, because, for short-term approach that I mentioned, it is not sustainable to import. It is not sustainable to keep giving subsidy. It is not sustainable to keep giving waivers. But because you already have medium and long-term strategy, as you are exhausting some of those strategies, your medium to long-term approach will begin to yield fruit, and it will cushion the effect. Because at some point, the current positive news that we are getting on FS, right? If we don't produce, if we don't export, fundamental will always catch up with every macro indicator, irrespective of what is driving it now. The fundamental driver of pricing is demand and supply. If you want price of food to remain significantly low for a very long time, a lot of countries, in fact, in the US, UK, you see negative inflation, deflation on food, deflation. That is, prices are going down, not just deceleration, they are going down. If you want to see that, you have to increase supply. So every policy to increase supply is what should be at the forefront at this moment.
Brilliant. As usual, investment strategy and portfolio manager with Afrinvest West Africa, Mr. Temitope Omosuyi. Thank you. Enjoy the rest of your day.
Thank you.
Interesting conversation as usual with Mr. Omosuyi, but let's go to